Today on the show, I have the pleasure of speaking with Yonah Weiss. Yonah is the powerhouse of property owner tax savings. He's a business director at Madison SPECS, a national cost segregation leader that has assisted clients in saving tens of millions of dollars in tax through cost segregation. He has a background in teaching and he has a passion for real estate and helping others. He's a real estate investor and the host of the top-rated podcast called Weiss Advice. Weiss Advice. I'm really pumped and excited to have him on the show today to share his incredible knowledge with us. G'day, Yonah. Welcome to the show. How you doing today, mate?
G'day, Reed. It's a pleasure to be joining you today. How you doing?
Good, my friend. And for those people who can't see, Yonah has an awesome background of my hometown, Brisbane. And the only reason I could identify the background was actually through the Gateway Bridge, was actually the bottom half of the screen on the water. That's the, not the Gateway Bridge, but the Gateway, the highway just there that's actually on stilts. But mate, enough out of me. How are you doing today?
I'm doing wonderfully. Thank God. Very blessed to be living the life in Brisbane. No, actually located right now in Jerusalem, and I'm loving it, awesome. Just enjoying everything.
Well, mate, I want to dive all into your background and story. And the beauty of this show is what we do. So I try and tease out exactly how you've created something from nothing. So my first question for you, my friend, is rewind the clock and tell me how you made your first ever dollar as a kid.
First ever dollar I made as a kid was probably doing a little lawn mowing. Right. And it was just kind of family chores, but something I really didn't like doing. And mowing the lawn actually made a dollar or two, I think, when I was about, 7 or 8 years old. So that was fun.
It seems to be the classic, boy upbringing in America or in Australia or wherever it is. Like get on the tools and go and cut some grass, particularly for the neighbors.
Exactly. It's the ultimate of outsourcing, right?
Isn't
Your
it?
parents are like, here's activity I don't want to do. Let's hand it off to someone.
Exactly. Here's a lawnmower. Push it around for the next 2 hours. Work yourself out, and then you'll knock out and go to sleep. So it's a win-win for all parents across the globe. But mate, walk us through your story and your journey, how you've got into where you are today. And I know we're talking a little bit offline about how you've relocated to Jerusalem, because originally you grew up in Los Angeles, right?
Yeah, that's right. Grew up in LA, went to college in San Diego, had a love for Israel, being an Orthodox Jew, and had never been, and actually took a trip when I was 20 years old and basically never left. I mean, I went back, multiple times and actually went to finish a year of college in San Diego. But ultimately, I found my passion, which was really, studying and teaching, and spent the better half of about 15 years in Jerusalem, teaching and just living a very deeply spiritual life, really removed from anything business or any of the sort. So it was only until about 5 or 6 years ago that I got involved in real estate. And it was kind of on a whim, just looking for some additional income, some additional sources of revenue, have a big family at this point, thank God, and was just looking for something more. So that's when I reached out to some friends, found out, they were doing real estate, various different roles, brokers, commercial mortgages, fix and flips. I had a lot of friends in the States and in Israel that were doing, involved in real estate in multiple capacities. And I just was like, okay, this sounds like a great industry. People are making a lot of money doing this. Doesn't require any additional formal education, which I wasn't interested in doing. So I was like, okay, let's just learn. And I kind of got my feet wet in multiple different areas. And, long story short, here we are later. Being involved in the real estate industry has just been an incredible blessing.
That's awesome. And talk to me a little bit about the evolution from spirituality teacher into real estate investor, because sometimes that can be a little bit at loggerheads with one another. The sort of the little devil on your shoulder. You want to go make money, you got to keep your roof over your head, but you also have a passion for helping others and spreading the word of Judaism in and around in Jerusalem where you're based today.
Absolutely. It is a balance, and it is a delicate balance. But I think once a person comes to, and I'm a very spiritual person, very involved with, live a godly life. But I think there is nothing that we do in life that cannot involve spirituality. So even the most seemingly mundane activities, if they're done with the right intention and they're done with the right mindset, and this is what people talk about, all, self-help and growth-oriented people are talking about the right mindset all the time. Well, if you just realize that, you're in this world for a purpose, and everything that you do, every interaction that you have is, there's purpose to that. And so it's not really a conflict when you approach business with that mindset as well. We are, entrusted with honesty, integrity in all our business dealings. And that's something that you can't really do if you're not involved in a business of all kinds. And it's really something that I take very seriously and think about. I spend hours every day studying and praying. And that to me is like, the same kind of line that people talk about. Well, you got to start your day off right, a morning routine and all these kind of things, because everyone understands that if you want to live an ultimately happy life, you have to focus on those things that bring you the most joy.
100%. And from a personal point of view, I know being an entrepreneur and just grind, hustle. It's always about this movement towards being more. And I saw a really great meme the other day, and I don't follow a lot of memes, but there was a pie chart, and there was a pie chart up the top, and it said what I originally thought success looked like, and it was a pie chart of 100% hard work. What actually success looks like: sleep, exercise, meditation, some hard work, but also being more of a balanced. And that was just so what you're saying about how you have to be balanced across your spirituality, your business, you're being self-aware, having a right mindset. It all comes together to be a good entrepreneur, to be a good business leader, to be a good person. And it starts with basic stuff that you take for granted. Don't take it for granted, like your family, like the fact that you get to breathe and walk on this earth and enjoy the sunshine, like that sort of stuff. Right. And that self-awareness is so important. And then applying that to what your business, it comes through, and thus people want to do business with you because they resonate with what you stand for, right? And that's
who you are.
Exactly, and who you are, exactly. I love that. So in and around that, how we're going to talk about cost segregation because that's what you're an expert in. So where does cost segregation fit into the whole pie? If we were talking about a pie chart earlier.
Yeah, sure. It was. At a certain point that I was involved in real estate doing various different things, but having my background being in teaching, that's really where my passion lies, and that's what I'm good at. Okay, those are the best. One of the best skills that I have is the ability to learn something of pretty complex concepts and then teach them and be able to give them over in a very simplified way so anyone can understand. And I was kind of searching for something within real estate. I did some fix and flips. I was brokering. I was doing a lot of things, trying to invest, trying to find deals. And a position at this company that I currently work for, Madison Commercial Real Estate Services, and specifically the Madison SPECS division, which is the biggest national cost segregation company. They were looking for someone in business development. And I was like, okay, let's see if this can work. I learned about cost segregation. I knew a little bit about it, but I learned more deeply and got to spend, a lot of time with the CPAs, the engineers who have been doing this for decades, really the experts. And I just borrowed from their expertise, really, and started, getting on podcasts like this and starting just to get the word out. And I found something very fascinating because as soon as I got involved in this company, I went out and started asking every single person that I knew in the real estate world, whether they were brokers, whether they owners, developers, and I just asked them, what do you think about cost segregation? I started working for this company, and I got two completely polar opposite answers. And those were the only two answers that I got. There was nothing in between. And one side of it was cost segregation is awesome. I use it on every single property. It's a no-brainer, saved me so much money. Absolutely been doing it for years. The second answer was, I have no idea what that is. So I saw this huge gap, and the majority of the answers were, I have no idea what this is. So I'm talking to real estate investors, talking to brokers, talking to people who are in the industry for years, no idea what it is. I saw this huge gap, knowledge gap. And I started to realize, well, this is a great opportunity, right? Anytime when you have a real big lack or a gap, there's opportunity lies. So I'm like, I can take my skills and just apply them and be able to start teaching people, get them to help them really, and it's helping people save taxes. So it's really everything that I love all combined in one.
Right. Well, and for those people out there who may not know what cost segregation is, do you want to just quickly give a high level 30-second pitch of what it is?
Absolutely. It's really a real estate tax deduction. So it's an advanced form of depreciation. And depreciation is a income tax deduction that you get when you buy a piece of property, besides for your personal residence. So if you invest in real estate, you get this tax deduction called depreciation. Cost segregation is just breaking down that depreciation into different categories that allows you to take bigger tax deductions in the earlier years of ownership.
That's beautifully said. And then for those people who, I'm going to add a little bit more to that, there's two types of depreciation from the IRS point of view, right? There is the standard straight line. I think it's 27 and a half years for a resi and 35 years for commercial. Is that correct? Is that right?
39 years for
39
commercial.
years.
You're correct. I'm 27 and a half.
Yep. And really, I know because I use it on all my deals. It's just you buy a deal, we close, we go, we do it, then we come back a year later and see all what the improvements are. And we'll get into that and how I do it in my business. But talk to me about the 39 years, because I know that a lot of, at least when I first got started here in the United States, when I was in resi and fixing and flipping, cost segregation didn't make a lot of sense because it just wasn't, it cost you a couple of $1,000 to get these engineers out. And it just like, stuff it, I'm going to use a 27 and a half year number and I'll depreciate it over 27 and a half years. But now you've got a bigger multifamily or office tower or something that is worth a lot more. You can go and break up the parts that, because things depreciate over a period of time. And for those listeners out there, if I have a fridge may not last me 27 years, right? I have a carpet, it may not last me 27 years. The building may last, the structure of the building, the concrete, the rebar, the roof, maybe not the roof, but the siding, it's going to stand up for 27 years, or 39 years in a commercial world. But let's talk about the parts of it, because that's where I think the nuts and bolts come down, and where people can really understand it, is it accelerating those little bits and pieces within the building that help you accelerate that depreciation, and thus investors can benefit quicker from it.
Yeah. So let's break it down a little more simply. So and depreciation, by the way, it sounds like a negative thing, right? It sounds like your building is actually going down in value, but it's really just a borrowed term. And I want to make this really clear. It's a borrowed term in the sense that your building, your property is probably going up in value, right? It's appreciating, but the IRS gives you a tax deduction that they call depreciation based on the concept that things go down in value. And it's true that certain components will actually, be replaced over a certain period of time. And that's really why they get shorter lives, and you can take the value of those over a shorter period of time. But basically what we're doing is we're breaking down the building. It used to be called component depreciation. So cost segregation is a relatively new term within the last 15 years or so. And what happened was the IRS says, yes, the whole property, you lump it together and you take a tax deduction divided by 27 and a half years. So a little bit every single year, or commercial 39 years, and you get that amount. That's lumping it, like you called straight line depreciation, lumping it all together, which is going to get you about a 2 to 3% on average deduction of the cost of your property every single year. Okay, so you buy $1 million property, you're getting between $20,000 and $30,000 of tax write-off. Okay, reducing your tax liability every single year. However,
just for owning that building.
Just for owning the building. That's right. That's part of the tax incentive of investing in real estate, is the IRS gives you this depreciation deduction, this write-off. However, if you have more of a tax liability, if you're making more money, so you want to be able to find ways or strategies to be able to reduce your taxable liability, and that's where cost segregation comes in, because it actually allows you to, in all honesty, the proper way to depreciate your property is to say, well, like you said, the fridge, the carpeting, the cabinets, all the stuff in the building that is not structural depreciates on a 5-year schedule. And I can take the value of those as a tax write-off much faster. So if I'm allowed to do that, why wouldn't I? And so you made a great point in saying at a certain point, small fix and flips, small residential, single families, it probably doesn't make sense because the cost of getting it done is probably going to be, equal or somewhere to how much tax deductions I'm even going to get. But the bigger the property is, the more tax deductions you'll get. So it obviously makes more sense because the fee, the price to get the study done is not contingent on the tax savings, which is a really important point. Right. So really, the more you scale up, the more deductions you'll have. So it's probably the biggest tax strategy out there for people in the real estate business to actually make money and make that money tax free.
And that's part of why we invest in hard assets, right? Like you can go invest in paper assets, but you don't get that depreciation. You can 100%. get appreciation, you get cash flow from your stock, but it will never actually, you can't depreciate anything against, and thus depreciation helps you write off any of the gains that you have throughout a hold. So for example, you have $100,000 invested in a deal, you get $10,000 in dividends or cash flow from the year. Your depreciation will be able to be used against that $10,000, and hopefully the depreciation equals what you get, so you don't actually have to pay taxes on that 10 Gs. Have I summed that up
exactly.
correct?
Yep. Exactly. And exactly like you said, and there's pretty much no other investment vehicle that I know of, aside from maybe oil and gas, but not taking that aside, that can get you the returns and be able to be tax-free money, which is, for even a passive investor, is incredible.
Yep. And so talk to me about if I had a $2 million fix and flip, would that make sense to go and do a cost seg on that?
So depreciation, and I'll just use cost segregation, depreciation interchangeably, because like I said, it's not something different. It's just a more advanced form.
Sure.
Is something that is only a deduction for rental property. Okay, it's rental property. And so if you have a fix and flip that is transactional, meaning you're not actually renting it out, then you can't do that. However, if you do, like, for example, the BRRRR strategy, right? Where you buy, right?
What up, bigger pockets?
Buy, renovate, refinance, repeat, whatever it is. Okay.
Yep.
When you're doing that and you're actually holding it as a rental property, I forgot rent in there, you're renting it out, then you get the depreciation deduction because you place it in service. Even if you go ahead and sell it maybe a year later, you can take depreciation. It might be advantageous. But here's something that just to kind of couple with that, I know many people who are involved in fix and flips, and they also have other rental properties as well. And part of the reason why they're doing this is because fix and flips is transactional. Transactional income is taxed at the highest possible rate, and you don't get the depreciation deduction to offset that. But if you have rental properties as well, you can get the depreciation. And if you're a full-time real estate investor, real estate professional, you can use the deductions from your rental properties, the cost segregation, to offset the income from your fix and flips or your wholesaling or other activities or brokering activities. So there's a way to kind of combine that to actually maximize the deductions.
Love it. No, I think that's super important. And I guess my next question for you is, cost segregation, like debt, like accounting, it's a service-based business, right? It's a commodity. You can go and choose a plethora of different companies out there. So what makes your company, and we were talking about earlier about who you are and your spirituality, how does that resonate with what you do? So do I know that Eyes Reed Gooson's bringing my portfolio of Wildhorn Capital over to you to say, what makes you better than who I'm currently using today?
Well, obviously it's the beard. I mean,
it's the good looks in the beard, right?
Right, exactly. But honestly, so we're, like I said, the largest national cost segregation doing this. I mean, the experience that we have, Madison SPECS has been around for 16 years, for example. But I mean, I think the most important, I'm not going to talk up our company because I think there are many companies like ours that exist in the country that are comparable. And what you're going to look for are really a few things. Number one, you're going to look for someone that has the experience, right? They have, they've stood up to audits, for example, right? They're going to stand behind their work in the event of an audit because, again, it's tax related work. You want to make sure that everything is compliant. The second thing is, I would say that they are entrepreneurial. I mean, business people in general are, but you'll have a lot of accounting firms, for example, that include cost segregation as part of their service. So we're not an accounting firm. We specialize in this, and that's all we do. And therefore, we business, entrepreneur, growing like that, have the very similar mindset, very relatable to a lot of real estate investors who are doing the same thing. So there's that kind of alignment of purpose, like I like to look at it. And like any service or commodity, as you know, it's really about, who you know. It's about the trust factor. It's about, are they giving me the best, the time that I'm looking for, And it all comes back to the beard. I mean, that's really the truth.
Well, but for those people who've never done cost segregation, they're going to go out and buy their first 50-unit property or 20-unit property, somewhere where it makes sense.
Right.
What are you sort of looking at from a cost perspective? And does it cost the same on a 20 unit as it does a 300 unit? And maybe you can walk people through that, because that's also
Absolutely.
a big factor when you're comparing different cost segregation companies, is the price, right?
Sure, absolutely. If you're, like anything, if you're looking at it from a commodity perspective, absolutely 100%. It is cost is one of the big factors there. And I totally get that, totally understand that. The cost, as I mentioned, is not contingent to tax savings, which there are, as I've heard, some companies that actually do that, which is a little bit fishy in terms of tax compliance, because you're basically a third party is supposedly telling the IRS you should get X amount of deductions and we'll take a piece of that. So
you sort of open yourself up to saying, do I need a haircut, barber? I'm like, yeah, he's a good haircut. You know what I mean?
Exactly. You have a conflict of interest there. But as a true third party, we're at being the biggest in the country, we are able to cut our expenses, by a lot. So we're probably the most competitive out there in terms of pricing. Typically for multifamily property, somewhere between $4,000 to $6,000 as of now. When you're listening to this in 2021, that's kind of our fee structure. And it does depend a little bit on the size of the property, the number of units, if it's garden style, how many buildings there are, how many different unit layout types there are, et cetera. So there are some of those factors, but very different. So if you buy $1 million property versus a $10 million property, 20 units versus 300 units, the fee is pretty much going to be the same, give or take. So therefore, it starts to makes exponentially more sense the larger the properry.
Yep. No, that's a very good pricing, by the way. I know we don't get that on our pricing, so I need to come over and get a quote.
There you go.
Yeah. Look, but what do you expect back as an owner? Like, I know there's reports that come back, and I as an owner to this day, I let my CPA deal with it, but I have a third-party CPA, I have a third-party cost segregation company, and I make sure that those two are chatting. But what should I be looking for in the resulting report as an owner to make sure that they're doing what they say they're going to do?
Well, I think part of the process, and we do this, and I believe every company that's out there that is a reputable company gives an upfront kind of analysis of projections of what you can expect ahead of time. So it's really transparent in that we're going to tell you what your minimal tax deduction, what your minimal tax benefit is going to be even before we start the process, right? For free. We'll tell you that. So what can you expect? I mean, I think it should tie back into that, right? You'll have your expectations from that kind of free consultation ahead of time. But in terms of, actual numbers, it depends. I'd say practically speaking, for multifamily properties, you're looking at about, average 25%, anywhere between 20 to 30% of, and sometimes more, of reallocation. So to put that into numbers, and so it makes sense, if you buy $1 million property, you can look to about $200,000 to $250,000 of that to take as accelerated depreciation. Okay, and with the new law called bonus depreciation, you can actually take that all in the first year as a tax write-off.
Interesting. No, that was very well said. I think it's good to understand what you're expecting to write off and in around the 25%. But and so that's what you would advise when you're looking at a report to say, okay, my value of my property is worth X, so thus I should be thinking around the 20 to 30% of a depreciation should be written into the report. And then I guess, how do you make sure they're not fraudulent? To your point, like of those people who are like, oh, we're doing a fee for how much tax we save you. They're going to be pushing the upper echelon of it. So, how do I, as the owner, make sure I'm not being hoodwinked? If you can even tell by a report. Yeah,
I mean, that's a great question. It's very difficult from a layman's perspective to kind of understand the ins and outs of it. I would hope that there's enough trust there that the people that are doing it have the experience and are doing it correctly and accurately and all according to the tax code, the audit guide, which is put out by the IRS. And so there are a lot of principles. It's not like you can really kind of make it up. You have to follow the principles that are there. So it's not like there's going to be too much discrepancy between one company and another if they're all doing it right. Right. There may be some that are more aggressive or maybe use certain different types of methodologies, but all is said and done, there's probably not much to discrepancy there.
And I think that back to what I said before, it's about your team. I get mine from a cost segregation group. I then make sure my CPA is reviewing it because that's what I pay him for, and he's making sure that it's all staying on the train lines and not veering off. And then thus we move forward and make sure that all our investors participate in that depreciation in the first couple of years. So I guess the big question here is what do you got planned in 2021? Another question before we get into 2021. Do you have businesses outside the United States? Because we're talking about and I know where this show is all about US investing, it's the IRS, but you're in Jerusalem. So like you're in Israel. Like what, do they have bonus depreciation and cost segregation in Israel?
They don't. I don't think they're, as far as I know, and I'm not a tax expert, outside of the United States.
Yep.
But, and as I said, I work remotely, so I kind of get the best of both worlds. I live where I love to live, and I get to work where I love to work. And, the company is totally, fully based in the US. There is something very interesting in terms of depreciation outside of the US, is that in terms of other countries' tax laws, I'm not aware that it exists. There are certain things like depreciation in general, but accelerated depreciation, as far as I know, does not exist anywhere else. One thing that does exist is if you are a U.S. taxpayer, you are an owner, and you pay taxes, and you own a commercial property outside of the U.S., you can actually take depreciation on that, and you can use cost segregation on your commercial property that is located outside of the U.S. for your U.S. taxes.
Interesting. Very interesting. I will say, look at the tax treaty because the US has a tax treaty with other countries. And I know that from a layman's term, and this is not necessarily to do with cost segregation, but I pay tax. If I'm a US citizen who lives, because I just know from my wife, if she lives in Australia, she has to report to the United States, and then there's a treaty. So she'll get a credit on the Australian tax that she has to pay, what's called the Australian Tax Office, if she happened to live in Australia and be paying taxes. So it sort of goes all the way around. It comes full circle. But that's very, very interesting. It's very similar to 1031 exchanges. If you're a US-based citizen, but you have you own international real estate, you can 1031 into other international real estate if you're US-based. So it's very, there's a lot of different levels out there. Just know that people who are investing outside the United States who might be US citizens. Now, coming into what are we doing in 2021? What's the world looking like for you post-COVID? If we can even say that word now. I don't know if we can even say that word yet. I think it was still in COVID, but hopefully coming towards some sort of tail end with the vaccine being rolled out and all that sort of stuff.
For me personally, I'm really focused on investing in the U.S. So that's really my goal for 2021, is to be more involved on the general partnership side of some real estate, multifamily specifically deals. I did have a very small role in a deal back in last fall of 2020, and that was kind of getting my feet wet for the first time in larger multifamily deals. So that's really where I'm moving and heading in the direction, kind of on the side for now, but hopefully transitioning more into that world in the future.
Well, I love it. I love those ambitions. You got to start somewhere, right, mate? You got to you don't get to deal number 10 without doing deal number 1, and that can in any shape or form that does. Tell me a little bit before we get into the top 5 investing tips. You also have a podcast. What is that all about, and how are you providing incredible information back to your purpose in life of the teaching? How has that been a real good element or tool that you've used into spreading the word?
So I love these conversations, right? And I've been actually, what prompted me to start the podcast in the first place, Weiss Advice, is I had been a guest on about 150 podcasts or so, and I love the interactions. I really do. I love this medium. I love social media and, the ability to take this and, kind of share the message at large with, multiple people. All one's kind of scaling those relationships. To me, that was fascinating from the guest side of things. And when I decided to make a podcast as a host, I was looking to see, well, I love real estate. I want to be involved in real estate, but I don't want it to be like all the other hundreds of podcasts that people are starting every other week. I want to do something a little bit unique. And so I took, obviously the name was kind of catchy, right? Weiss Advice. And the concept is really to interview people who are in the real estate industry, but not necessarily to talk subject matter, maybe just to have a conversation more about who they are and what they're doing and their stories and things like that. So it's really more personal get to know people, kind of more like a talk show than a real estate course that like a lot of podcasts are.
Oh, I love it. And that's part of what this podcast has morphed into after going over, we're up to 250 episodes, 5 years ago. There's only so much real estate you can talk about. And then it really gets into more the personal, journeys and the struggles, because everyone has a journey, and it's great to listen to this medium and hear others who have been on that journey with you, because entrepreneurship can be so lonely at times. And that's the best part about podcasting. And that's why I also love this medium, getting to know people who live halfway across the world in Jerusalem, being on this show. Well, mate, we are coming to the end of the show, and at the end of every show, we'd like to do the top 5 investing tips. You ready to get into it?
Sure, let's go.
Mate, what is the daily habit that you practice to keep on track towards your goals?
I think the biggest habit that I have that keeps me in line with my goals goes back to the spiritual things. So it's really focusing. Some people call it meditation, but it's really praying, kind of focusing the energy, because that really dictates how your whole day is going to be. So starting off the day with the right mindset, that's what it's all about.
I love it. I've started meditating the last couple of years, and if I don't do it of a morning, my day's off. I'm not in alignment with myself, and it just I be a little bit grouchy. Mate, question number 2: who's the most influential person in your career to date?
There are so many on different levels, but I would say because of the large effect or influence that I've had with social media and how I've been able to kind of brand myself and do that. I think Gary Vaynerchuk had a very influential, not that he knows that, but not that he knows that for millions of people, had a really great effect, and just kind of the approach of how to approach, business and sales and social media in general.
Love it. No, Gary Vee I would love to get him on the show. I think you've got to pay to play with him. But
exactly.
But I would love to maybe one day get him on the show. But he's a very influential person, and breaks it down in a way that people may say it's crass, but I think he just shoots it like it is. And he is what he is, and he's authentic, and you're either attracted to it or not. So it goes back to your purpose and being true to yourself. So I think that's really important. What is the most influential tool in your business? And when I say tool, it could be a physical tool like a journal or a phone, or there might be a piece of software that you just can't run your business without. And I'm sure, being in Jerusalem, I'm sure I can already determine which one's it's going to be.
I was going to say Zoom, but I think that's pretty much what everyone is going to say nowadays, because it has been. But I'll actually say Calendly. That's a calendar tool that a lot of people use. I use it for multiple things, and literally I have my calendar filled up every day without my knowledge, right? And it's just like booking appointments, and I already have, everything's working kind of streamlined that way. So that's saved me countless hours of work. In the last couple of years, I've been using it. So
I'm a huge fan of Calendly. There's a few little functionality things with the podcast that I'd like to change, but I love Calendly and its ability to streamline that conversation. Question number 4: in one sentence, what has been the biggest failure in your life, and what did you learn from that failure?
I actually had a big failure. Okay, now we're remembering something, that I had a development deal that we were about to close on, and it was kind of my ego that got in the way of thinking that this was going to be a great deal. And even though one of the attorneys had major concerns about certain issues, my ego kind of got in the way and was trying to push the deal through until the last minute, until we literally pulled out at the last minute. And thank God we did, because that attorney, as we saw in hindsight, was 100% correct.
Wow.
So that was a big failure that, that I learned from. Don't trust your ego, trust someone who's more objective.
Yeah, ego can cause so many issues. Have you ever read the book Ego is the Enemy by Ryan Holiday?
I have not, but I've seen it quoted many times.
Yeah, it's a good little book on in and around ego and how much it can just ruin business relationships, even personal relationships. So it can be quite toxic if you don't check it at the door, which comes back to meditation and self-awareness, which we could spend a whole podcast talking about that exact thing. That exact thing. Question number 5 and last question is: where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
Best place to find me is LinkedIn. I'm actually very active on that platform. Check it actually more often than email and respond there. Or you can go to YonahWeiss.com.
Awesome, mate. Well, look, I want to thank you so much for jumping on the show today. I want to just quickly summarize what you have given the audience today. And I think the breaking down cost segregation, as much as you don't necessarily need to be an expert in it, you do need to understand the functionality of it, of accelerated depreciation over a long period of time. It probably only does make sense the larger the assets you're doing. And it was interesting to hear about the transactional piece, which I wasn't quite aware of, that if you're doing a $2-3 million fix and flip, you're being transactional, thus you can't qualify for cost segregation. So really awesome stuff. Loved your pricing. And then come back to trust and transparency, because it is a service-based business. You have to know the people you're getting in, doing business with are going to keep your best interest at heart and not have, do something fraudulent with the IRS that could get you into a lot of trouble. Did I leave anything out?
The good-looking beard, I guess. That's
the good-looking beard. That's exactly right. The good-looking beard. I forgot all about the good-looking beard. Yeah, it's how long is it now? It looks like a good
It's
foot
pretty
long.
long. Yeah. It's oh, I can't see it.
Do you use any conditioner or to keep it soft?
Yeah, it just keeps it pretty natural, but
every now and then the wife doesn't say, yeah, you need to wash that.
No, well, yeah, I don't mean au naturel that I'm not washing it.
I love it, man. Well, look, buddy, thank you so much for jumping on the show. Enjoy the rest of your day, and we'll catch up very, very soon. Well, there you have it, another cracking episode jam-packed with some incredible advice from Yonah Weiss. If you want to know anything about him, go over to LinkedIn and search his name, YONAHWEISS on LinkedIn. It's also YonahWeiss.com. He's got a lot of awesome stuff going on in the cost segregation world. I want to thank you all again for taking some time out of your day to tune in to, to learn more about what we have to give here on this show. We're going to do it all again next week. So remember, be bold, be brave, and go give life a crack.